I'm Scott Grissom, but my students call me Professor G. I've been a professor for over 25 years, and now I teach other professors, like you, how to confidently manage their finances. Today, I want to give you 5 simple tasks you should consider performing this summer during your break. These 5 tasks include 1. Increasing your contribution to your 403b by just 1%. Increasing your contribution to your HSA, your health savings account. We'll go into more details about each of these steps. Update your net worth statement each and every year. Summer is as good a time as any. Review your investment portfolios to make sure that you are investing in all the different kinds of options, such as stocks, bonds, and others that you originally intended. And number 5 is to check your beneficiaries to make sure that your survivors get access to your assets easily and without difficulty. So task number 1, I assume and hope that you are contributing to your 403b. Perhaps your university contributes a certain amount, 5%, 10, 12%, but you should also be contributing as well. So let's suppose you're currently contributing 4% and you want to nudge that up to 5%. Or if you're not contributing at all, I'd strongly encourage you to consider contributing at least 1%, going into HR and get the paperwork done to get it started. So what are the benefits of that? Well, let's look at a scenario. Let's suppose your current salary is $80,000 and you want to contribute an additional 1% to your 403b. Well, that's about $800. Now, if we project this out, the impact over 20 years, you would think 800 times 20 is $16,000 being added to your retirement account. Well, while that's true, we also want to factor in that during that time, you're going to invest that money into an appropriate collection of stocks and bonds and perhaps some other investments. We're also going to assume that your salary increases each year with inflation by 3%. So if you factor in all these mythical scenarios, how much do you think this one impact of clicking a few buttons this summer to increase your contribution by 1%, how much more will you have in 20 years? You're thinking, multiplying, projecting. What do you have? $41,000. That's pretty good for just a few clicks this summer. All right, task number 2. Let's talk about your HSA. I hope you have one. Now, this means that you have to have a high deductible health plan. And then with your HSA, any dollars that you contribute now are deductible. But unlike a lot of investments, it's also tax-free when you come out on the other end, when you actually use that money to buy medical services. So this is really a terrific tax savings opportunity. The most that you can contribute, at least in 2024, for your family is $8,300. So how could this impact you? Let's suppose you increase your contribution by $1,000. Maybe you're contributing right now $4,000 each and every year because that's what your deductible is. And it just makes sense to you that you only put enough in each year to pay for what your out-of-pocket expenses will be. But if you think about the tax advantages, the more money you can put in, the better, because all that money rolls over from year to year and potentially grows to have a really significant impact. So let's suppose this year you up your contribution an extra $1,000 per year, maybe from $4,000 to $5,000. That extra $1,000 is going to save you in federal taxes, maybe 24%, depending on your state. If you have a state income tax, let's assume that you're going to save 4% in state taxes this year. And you're also, and this is a really nice benefit of the HSA, you're going to save potentially on Medicare and Social Security. So that's about 7.5%. So collectively, how much are you going to save this year just by increasing your contribution by $1,000? Let's take a look. $356. So that's pretty good payback. Put $1,000 in for money that you're going to spend anyways on medical expenses going forward and save this year $356 in taxes. Task number 3, update your net worth statement. Maybe you do this, maybe you haven't even put one together before. A net worth statement is a great indicator of your current financial health. So we're going to calculate all your assets, everything that you own, maybe a home, some cars, some investments, money in your checking. We're going to subtract from that everything that you owe, generally a mortgage, maybe a car loan, maybe a little bit of credit card debt, maybe you still have some education debt. So assets minus liabilities is your net worth. So in this fictional example, we've got a net worth of about $300,000. Do this each and every year, and hopefully you can enjoy seeing that number go up each and every year. So net worth, great financial health indicator that you should be taking each and every year. Task number 4. Think of your investments collectively as a portfolio. So not just your individual 403b. Maybe your spouse has an IRA or a 401k from a private employer. So combine these 2, 3, 4 different accounts into one fictional account or supplemental account, and make sure that you have the right balance then between stocks, bonds, and some other alternative investments. Hopefully, this is something that you have identified previously, and then each year you want to make sure that those balances are staying intact. Normally, as investments rise and fall independently of each other, this proportion gets out of whack a little bit. And so at least once a year, you want to rebalance, is the term that we use, and make sure that you're back to the proportions that you intended it to be. And then finally, task number 5 is to make sure your beneficiaries are up to date. Take a look at your checking accounts, certainly your retirement accounts, any other kinds of investments that you have, so that if you were to die prematurely, you want to make sure that your survivors get easy access to these funds. We don't want them to go through a will, to go through probate, which takes time and effort. So you're doing a favor to your loved ones to make sure those beneficiaries are there. I, for one, went 18 years without realizing that my spouse, my wife, was not on my beneficiary for my university 403b. So it's easy to overlook, especially if you get remarried or you have recent kids that have been born. All these family changes generally mean you want to revisit whether or not you're having the right beneficiaries. So those are the 5 tasks, but I'm going to give you one bonus task as well. So when we talk about beneficiaries and wills, those generally kick into place if you have died prematurely. But what if you become incapacitated? You're in some kind of car accident, or you have some kind of a stroke, or other kinds of things that leave you mentally incapacitated for a short time or perhaps an extended time. Well, then you need to have several legal documents in place that is not a will, that helps your loved ones and your survivors to make decisions on your behalf. So you want to make sure, if you haven't already created them, these are generally pretty simple and standard legal documents that you can create, pretty straightforward. Power of attorney, you want a trusted person to be able to make legal decisions on your behalf if you're not able to. Once again, you're alive, but you are not able to make mental decisions. You want a medical power of attorney. You want someone to be able to make medical decisions on your behalf. Should you have that surgery? Should you have those tests? A variety of other kinds of decisions might need to be made. A living will is your wishes for end of life. So who can work with the doctors potentially at the end of your life to make decisions about when to end your life or not? And then finally, HIPAA authorizations. You probably sign HIPAA release forms each and every time you go to the medical doctor. So these are going to make sure that if you are incapacitated, once again, you're not able to make decisions on your own, you want other people to have access to your medical records. So this is slightly different than the medical power of attorney, a lower threshold, but still important nonetheless. So remember, 5 tasks you should consider for this summer. One is to increase your 403b contribution by just 1%. You ought to be able to do that perhaps online or contacting your human resources department. Increase your HSA contribution by a certain amount, maybe $1,000. Update your net worth so that you can use this as a measuring stick from year to year. Confirm that your overall portfolio of investments is meeting your long-term goals, that right balance between stocks and bonds and other kinds of investments. And then finally, make sure your beneficiaries are up to date to make it easy on your loved ones if you were to pass prematurely. So consider this your summer homework, and hopefully some of them make sense to you and you go out and take action.